Hi, it's Kirk Lynch again. This video is going to deal with credit memos and how to record them. Actually going to be one of two videos. I'm going to do one that deals with credit memos that are issued by us. That would be the first one you see on your screen here. And then I'll stop that video. We'll do another video that deals with credit memos that are issued by someone else to us. So just a little brief overview of what are credit memos. In this case, some company called XYZ Company bought some stuff from us. We sent them an invoice, we sent them the inventory, and they got it and they said, well, we don't really want this stuff, and they sent it back. They sent back 4 table saws for us that cost $250 when we charged them $250 for a total of $1,000. We offered them a discount, so the total would have been $980. And those 4 table saws cost us $725. So let's talk about how we are going to record the fact that we have received this inventory back into our asset account, and these people no longer owe us this money. Now, the flip side of that, this other memo that we're going to do down here is that we bought some stuff from this company, this Target Hardware Supply, didn't want it, sent it back to them, and so we have to deal with how we no longer owe them any money for those particular items. So let's start with this one. These credit memos, I've been identified which forms they are. They happen to be 21 in this particular case. I believe the other one is 39 maybe. You'll have to look it up. I gave it this in the information on Moodle. But let's see what we do with these. These get entered into our general journal. So we need some information here. The date, which is June 11th. This company is XYZ Company. And so let's start with that amount of information. So in our general journal, we're going to write June 11th. And so our first entry here is to an account called Customer Refunds Payable. This is a liability that says we're going to have to pay these people. Now, the amount that we owe back to them is this $980. And so in this particular transaction, in the debit column, we put 980. Whoops. There we go, $980 there. And in the next line, which is our credit, we're going to write accounts receivable, and then dash the name of the company, XYZ Company. Now in yours it'll be different. You have to, this is just an example. Again, we're going to credit the $980. This actual credit memo, when it's returned to us, takes 2 different journal entries. This was the first one. The second one is we're going to put this back into our inventory. So a debit to the merchandise inventory, we'll put it back in there. And if we look at this transaction, it's this $725 that we're putting back into our inventory. So we're going to go here and put $725. And then finally, estimated returns inventory as our credit, and $725. Now, like with all journal entries, we have to go post this information into our general ledger, and in this particular case we have to update not only the general ledger accounts receivable, but also our subsidiary ledger for XYZ Company. So let's start posting this information into our general ledger. So we're going to start a row at a time here. Customer refunds payable, we're going to debit $980. So in our general ledger, we're going to find customer refunds payable, and so it's going to be down here with our liabilities, and right here, customer refunds payable. So looks like a balance, a credit balance of $4,000. So this was on the 11th of June. This came from our general journal, page 1, and it was a debit for, what was it a debit for? It was a debit for $980. So debit 980. That's going to make our balance a credit, okay, of $3,020. The posting reference for that is 214. So back in our general journal, we're going to put 214 here and move on to the accounts receivable. Now, as I said earlier, this is going to require two different posting references, one for accounts receivable general ledger and one for XYZ company. So let's start with the general ledger account, a credit of $980. So back in our general ledger, we're going to find accounts receivable up with our assets. Should be the first page of your general ledger. Right here at the bottom, and we can see we only have the balance forward at this particular time. So on June 11th, we're going to say this posting reference came from our general journal on page 1, and it was a credit for $980. So 980. That's going to leave a balance in this account $46,525. Debit. Okay. Now that posting reference is 112. While I'm here, I'm going back to the accounts receivable subsidiary ledger. Here is XYZ company. It shows they owe us $8,000. And so on the 11th, from our general journal on page 1, we're doing a credit of $980. And that means the balance of this account is $7,020. Oops. And subsidiary ledgers get check marks. So back in our general journal, in a posting reference column, we're going to put 112/ and a check mark, which is hard for me to do, so I use an X here to show that we updated both the general ledger and a subsidiary ledger for XYZ company. Now let's continue with this posting. We're going to go to merchandise inventory and post a debit for $725. So in our general ledger, we find merchandise inventory. It's right here. And so on the 11th, from our general journal on page 1, a debit of, I can't remember what it was, $725. So debit 725. That makes the balance of this account $730. Updating our balance, and that's account number 114. So back in our general journal, we put 114 there. And finally, to post this estimated returns inventory in our general ledger, it's the account right below this. We're going to credit $725. So let's put that in there before I forget the number. This was June 11th. It came from general journal page 1, and I can already see that I made a mistake up here. No, we're good. Yeah, we're good there. Thought it for a minute I had subtracted instead of added. This is a subtraction, and so if we take if we take 2,500 and we subtract 725, we get a balance of 1,775. So this is going to be 1,775 is our new balance. And finally, our posting reference for this is 115. And so back in our general journal, we put 115. Now, this is one of 2 credit memos that you're going to receive that look like this, where somebody returns stuff to us. And in both cases, these are the accounts that need to be journalized. The difference is the name of the company that are one of our customers will be different, and so your subsidiary ledger posting will be to a different place. And again, this is just a representation of a credit memo. Your actual credit memo will be different numbers, different company names, but this is to show you how the process works. I hope you found this useful, and if you have any questions, please don't hesitate to call.